Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
We're going to hear about a couple of tech companies now from our two strategists who join me, Daniel LeBeau here at the desk, and Brian Boland, the familiar Brian Boland, out there on the Skype platform. So we're going to start with you, Dan. You are covering NVIDIA. Mm-hmm. That's a name we've heard a fair amount of.
Yeah, no, they've been doing a lot in the GPU space. So first I'm going to look at the GPU space and kind of explain what a GPU is and how it's used today. Sure. And then we'll take a look at the duopoly within the market of the GPUs. Cool. So a GPU stands for a graphics processing unit, which is effectively, it's actually quite similar to a CPU, which is the brains of the computer. A GPU is able to process a lot more information, but at a simpler level, while a CPU is used for more complex functionalities and usually does a lot less functions at the same time. Okay. So the duopoly right now is with NVIDIA and AMD. Like you mentioned, NVIDIA. Mm-hmm. NVIDIA controls over 80% of the GPU market, and AMD controls a little bit less than 20%. So right now, obviously, it's a graphics processing card. So it's used to render images on a computer. And every PC gamer and their brother is going to give you their 2 cents on what they prefer, what gives you the best value, what gives you the best performance. Sure. And what's the most functional one. And at the end of the day, AMD is more value proposition GPU, and NVIDIA is known for their high-performing GPUs, which are a little bit in the higher end of the price range. But GPUs are doing a lot more than just graphics processing nowadays. They're being used in data centers, used to develop AI as well as machine learning. And there was a huge splurge into this market when the crypto mining was big in the last 2 years. Obviously, it's died out a little bit, but they called it hyperscaling when these huge data centers that were mining cryptocurrencies came in and bought up a huge portion of data center GPUs from AMD as well as NVIDIA.
So what does all this mean to NVIDIA stock for investors?
Well, I mean, the stock has boomed over the last 5 years. It's up somewhere between, 750% around. AMD's up 630%. Most of their revenue is coming from gaming, but the data center and cloud-based GPU tech is growing significantly in their portfolio. I think it's grown 330% over the last 3 years. So they're focusing a lot more on that. And they actually have a acquisition pending right now with Mellanox. Am I saying that right? Yeah, Mellanox, I think. And the company is going to broaden their portfolio even further into the data center functionality, because they're used, I think it's Ethernet functionality as well as, I guess, just different tech within the data centers, and they have a lot of customers that they're able to that NVIDIA is going to be able to leverage to broaden their exposure there. So I think the future of GPUs as the tech develops and as the sector develops is going to be more and more used in cloud computing and in developing AI. And AI right now, analysts are anticipating a $15 trillion total accessible market once it's fully developed. And I think there's a lot of upside potential to NVIDIA and AMD. But NVIDIA right now controls 97.4% of infrastructure as a service for cloud computing companies like Apple, Google, Amazon, and I think they're going to continue to keep that market share and grow in that space.
So good reason to keep an eye on NVIDIA. All right, Brian, you have a company called OKTA, Inc.
Yeah, OKTA, it's a internet services software company, so it's authentication management and lifecycle management. So large corporations are using this software. We can see on the screen here that it is a Zacks rank number 3, has an F for value and an A for growth. So you know that I like that, Terry, because of the
divergence.
The divergence, exactly. Growth investors, value investors, they're both looking for different things. So when I see those scores wildly different, I'm pretty happy about it. So let's take a look at why this is a Zacks rank number 3. We've seen a great results on the bottom line here. The company has beat 4 of the last 4 times with the average positive earnings surprise of 37%. But you can see estimates aren't really moving that much, over the last 60 days anyway, and that's when the Zacks rank is open to movement here. So 46 cents to 46 cents, no real movement there. A loss of 10 cents looking for this quarter. And next year, same idea here, a loss of 19 cents and pretty much holding still. So the analysts are getting a little bit of better handle on this type of name. So that's why the estimates aren't moving around that much. If we look at the valuation, because there is no earnings, the forward earnings multiple just isn't there. But we can see the growth is definitely here, 50% annualized on the top line, at least in the last quarter. And then your valuation getting stretched here. It's 63 times book, 34 times price to sales, which, I'm not going to lie, both those numbers are very big and, hard to handle. But this is the reason why. As we look at this chart here, we see the stock basically moving from, the mid-20s over the last year and a half, now up to 130 or so, touched 140 recently before coming in. Estimates are still pretty good, but you can see a very good history of beating the number when the stock moves up like that. And it's clearly moving a lot faster than the fundamentals. That's why the valuation is really getting stretched here with a 63 times book and, a 34 times sales. So, we look for the numbers to start catching up. We want to see a little bit more growth, things like that. But for the most part, this is definitely a name to keep on your radar screen because it's reporting Wednesday after the close. Options market is pricing in a 10% move. So if we're looking at the stock at about $130, that could mean a move in either direction, up or down, of around $13.
Okay, do you own either of these 2 stocks, Brian?
I do not.
All right, how about you, Dan?
I do not.
Okay. Thank you both for that information. Don't forget, there's more stock information on our website, Zacks.com. Get on over to the homepage of the website to begin sifting through it. And don't forget about our podcasts also on the podcast page of Zacks.com. With Dan and Brian, I'm Terry Ruffalo.